market strategy. Paul Schatz, president at Heritage Capital, as well as our continued Uber guest, Roger Nightingale from Point, New York. He is a strategist with them. Let's start, Paul, with you if we can. You like momentum. It seems that the momentum right now is with the price of crude, although Maura just showed it, Brent crude seems to be weakening up here today. What's your thought? What do you like in this marketplace that's so murky with all that's happening in the world right now?
Good morning, Matt. We like a bunch of things. You know, I'll probably be the contrarian of the hour. I'm starting to get bullish the dollar. I mean, the dollar's got more upside to it. I don't think the end of the bull market's here in the dollar. I certainly, this week, I'm going to love Treasury bonds. I'll be the ultra contrarian there. I think the move is overplayed yield-wise to the upside. I think bond yields definitely pull back. And that's obviously good for the bond market. At the same time, I think stocks continue in this trading range to slightly lower. The point of concern for stocks would be once we close below 870 in the S&P, and then it certainly opens up the downside to 830, 820, and then this whole rally from March 6th becomes a question mark. But I still think you pull back in the S&P, there is one more leg higher into the summer, at least towards 1,000 on the S&P.
Paul, I'm interested by your dollar call. I mean, the fact that you want to get long treasuries this week and the dollar, I mean, that they tie in together, because if you get a good auction, I mean, people still want to buy dollar assets. But tell me more. Why do you think people are going to want to keep buying the dollar here when we had all those fears last week?
And you hit the nail on the head. You know, when these rumors come out that the U.S. government debt's going to be downgraded and we're printing so much money that it's going to be hyperinflationary and gold's going to spike. If you think about it, we've printed now, you can argue with me on it, but close to $3 to $5 trillion. Yet gold still hasn't taken out its peak from March of 2008. There's something else going on there. You know, on the dollar side, the dollar is the ultimate safe haven during deflationary times. The dollar began its bull market at the same time that gold peaked, and I'd argue that you have a kind of a cessation of the move. So I think that, the dollar begins to move higher, and gold becomes sub 900. Are you one then, Paul? Is your central scenario here that you are, if not a deflationist, you are a low inflationist? I don't see inflation being any kind of trouble until at least 2011 or 12. I do not buy into the scenario that inflation is going to rear its ugly head now and we're heading towards double-digit inflation. No, exactly what you said. In the best case scenario, I think we get some kind of low, moderate inflation that's actually healthy for the economy, because Lord knows we've gone through this deflationary spiral. And I don't want to talk about the worst case yet, because that's probably, if it happens, then the deflationary spiral would continue in 2010. Let's take that off the table, but I do think for the bulls, you want to see 1 to 3% inflation. That's exactly what the Fed wants as well.
Roger, it's the second guest in a row we've had on that seems to sort of agree with your position. Is that getting uncomfortable for you?
It's unusual, certainly. But I think I'll go slightly further. I agree, actually. I have a lot of sympathy with that view. Dollar, I think, in fact, will be amongst the best of the units for the next 6-12 months, euro being towards the bottom end. Lots of emerging market currencies being way down as well. Yen is the only one that I would actually think would be stronger than the dollar. And as I say, I like the US Treasury bond market because I don't worry about the issuance, and I think that the inflation numbers will come in way below what people are talking about. I say not the 1 to 3, I say the -1 to -3 is the number I have in mind.
Yeah, I agree with you, and also let's keep in mind that the yen and the bond market, U.S. bond market, have a pretty good correlation, and lately they've deviated a little bit, right? Because the yen hasn't been nearly as weak as the bond market. So which one's right? I think the yen's going to be right in this equation.
I agree.
All right, Paul, it's Maura here in Asia. Let me weigh in and ask you this question then. How are you positioning yourself, given what you just explained to us, how are you positioning the assets that you have currently?
Well, first of all, I've been negative gold for a couple of months now. We're going to stay negative gold. I am bullish energy, so I'm negative gold, I'm bullish energy. We own some treasury bonds. I'm going to buy more treasury bonds this week. And I think the dollar is coming into that period where I'm going to want to get short the euro. So that's kind of in the alternate space. On the equity side, we've taken some chips off the table last week and the week before. If we get any strength early this week, I will get towards a net neutral level and maybe even go short.
All right, Paul, we'll get back to you in just a moment here. Paul Schatz from Heritage Capital. Roger Nightingale, of course, from Point in York. We'll get back to him shortly for his final thoughts as well. For now, though, let's head live to Tokyo and check in on the trading day there. Asuka Kondo from the Nikkei joins us with the details. Good evening to you, Asuka.
Good evening, Morad.